Welcome to the SFT Weekend Update. This is Morris. Let's begin by looking at the GBTC and the signals on that particular ETF, that particular entity. We got a sell signal at around 14.5, currently at 13.5. We use this because it works. A time to be in the market, a time to be out. Here is that same chart on a candlestick chart, and just going back into the middle of May, you can see the most recent sell signal, and here we are. You've got the 50-day moving average. The market is battling with the 50-day moving average, but I believe there's something much greater at play here, because right through here you have a potential double top, and you also have a head and shoulder formation that is potentially taking shape. I mentioned this the other evening. All of this area then right here at $12 is going to be very key, because if we break that on a weekly basis, this likely sets the market up to move down around, potentially would take you down all the way down here to around 8.5 or so on targeting of the inverse head and shoulder formation. We'll keep posted on all of this. Keep in mind, if you get a new buy signal and it kicks higher, this is just nothing more than a shape on a chart, and the up channel and the opportunity to make some money on a long trade could certainly present itself. Now let's move to the gold chart. This is nugget, of course. The market at this particular point is really standing on a dime's edge. Simply this market has been channeling lower, and this is a candlestick that could be deemed somewhat of a positive. It is a spinning stick, and a spinning stick is a reversal pattern. It works the same way on both ends. Here is one, and similarly here is one that offered up a sell signal before, and you can see them on both ends of the trade. Up here they're called spinning tops. Down here they're just a spinning stick, and many times you see an area, it could be just a pause, and it could simply work sideways, but indecision is setting up, because it's been a mini downtrend here for about the last, well, ever since we got in to the dark cloud. We talked about that. We've been talking about that for a while. So we're looking potentially for a reversal, but the market has been trending strongly higher since June, and that sets up a day of the test potentially of the 200-day moving average, which is way back here, and also there's really strong support down around $25 on this particular chart. I believe the key here is going to be this area right here, because you could break the channel and still be okay, but if you break in through the area of what had been this and what is the engulfing bullish stick right here, it engulfed the previous and gave us new move. If we break through that, it likely sends us down into a couple areas of potential support. Of course, a clean break, we have no home team, is simply going to give us confirmation that there's been some volatility in this in recent trades, so this would likely give us clear indication on where the market is going. So we come in with smaller allocations on our trade size, and that's why we do this. Follow those allocation recommendations, because we're into a point of volatility. We'll get the big trends again and the big moves, but at this point we've been dealing with what we call chop, just a lot of trading side to side, up and down, and that creates some uncertainty. We'll keep you posted on trade size and specifics of trade instructions on the email and text updates. That's all for now. This is Morris saying thanks.